Well, well. I hope you're not a government employee. If you are, you're going to be pretty mad about this news. I talked about this a few weeks ago. Geithner and the Fed and all this rating pensions to float this debt ceiling deal, which has been busted. They say they got another month or something. That's complete nonsense. They're already bankrupt. And here's news that basically to keep this to keep the Fed to keep the bankers happy, what they've done for the last couple of months is basically steal at least $120 billion out of government employee pension funds. But Geithner here, he says, well, that's okay, because as soon as we raise this debt ceiling and put the debt on the American taxpayers' future, these will be the first funds that are, replaced in here. Well, is that such a guarantee? Well, they're just going to raise the debt ceiling and keep raising it. We'll raid these pension funds right now, but yeah, that's based on the fact that, well, we're going to rob other people later. This is how stupid all this has gotten. And let's read part of this article here. As the chart below shows, while at the end of every quarter, the U.S. Treasury is traditionally supposed to fund a quarterly payment into the various government retirement funds. This time around, instead of putting even one penny into G and CSRD funds, Tim Geithner has decided to defraud government retirees by the most since the U.S. debt ceiling was breached, or specifically since intergovernmental holdings became a mere plug to make room for marketable debt. So while the debt held by the public increased by $21 billion following the settlement of last week's Treasury auctions, which by the way now are going horribly. The Treasuries are just, as soon as this support stopped from POMO and everything, the Treasury bonds are falling apart, and they have no answer for it. So anyway, $21 billion following the settlement of last week's auctions. In order to stay under the $14.294 billion ceiling, the Treasury was forced to disinvest another $20 billion from retirement funds. At this point, the various funds that fall under this umbrella are underinvested by at least $120 billion and likely much more. Yeah, I'd say it's likely much more. It's probably $200 billion, because there's no way in hell, with quantitative easing ending over a week ago and POMO and all this stuff ending, that the market should be floating. I guarantee every day they're going in and raiding pension funds and keeping stocks afloat. Hopefully, we're going to raise the debt ceiling and it'll all be okay again for a minute, until what happens? Maybe a month later, we're back in trouble again and got to figure out how to raise more debt. Unbelievable. Of course, this is not an event. Let's see. As soon as the debt ceiling is hiked, these will be the first funds replenished. On the other hand, if there is no debt ceiling hike, and courtesy of marketable debt having priority to intergovernmental debt, government retirees increasingly becoming impaired class in what may be shaping up to be the world's biggest bankruptcy filing in history. So that's all, But all is well, of course. Oh, all is well, here. There's no problem. We'll just keep doing quantitative easing and we'll just keep raising the debt. There's no problem. We're never going to run into a roadblock. All you have to do is just, you buy yourself a little gold and silver, and then that's an instant guarantee you come out the other side whole. But if I ask most people that own gold and silver, especially the financial people, I'm talking to them. I talk to them over here on Zero Hedge and all this. So, you own any firearms with all this gold? Oh, hell no. Oh, you're done. You got no chance. Gold and silver is not going to be some security blanket. And, in these days, I get right in people's faces. I talk to people at the grocery stores. I don't care. I want to hear what people are doing today about this stuff. I get right in people's hostile little faces and ask them, when they're pushing their 3 grocery carts through the line and whip out their freaking Snap card to pay for it. I tell them, hey, this is going to end pretty soon. Then what are you going to do? They just look at me like I'm crazy, But they probably go home thinking about it. There's the free ride is ending here real soon for people. All this, all you have to do is contribute to your 401k and you're set for life. They're going to come after all these pensions, all these 401ks and all this stuff. They're going to take them. And I don't think, this QE talk and this raising the debt ceiling stuff, it ain't going to come except with a bunch of pain and cuts. It's definitely going to be cuts all over the place. And it'll be a little bit here now. There might be a bunch here now, but then it'll definitely be more later, to the point where people are getting 20%. That's what's happening with all the states. States are cutting off 50% of people's benefits and food stamps and all this stuff. And Social Security last year lost $1.2 trillion. But that's okay. No, the money just magically appears somehow. Never mind that we're bankrupt. Yeah, but anyway, here's that story for today, and take a look at it. There's a lot of other stuff going on too in the markets and stuff today. Stuff's just crazy. Yeah, they're just floating this stuff day by day at this point. Anyway, take it easy. We'll talk to you later.